The Monetary Policy Committee of the Central Bank of Nigeria held its July meeting earlier this week against the backdrop of continued uncertainties in the global and domestic economies, which pose significant challenges to the policy environment. The committee assessed these challenges, made key decisions, and presented outlook for the rest of the year. Also this week, the International Monetary Fund (IMF) launched the World Economic Outlook Update, declaring that the COVID-19 health crisis is officially over and advising central banks to remain focused on restoring price stability and to also strengthen financial supervision and risk monitoring. We have details of these and more in today's package. That's in a moment. Stay with us.
Oh, I see. Just hold on. In that case, let me call out my PIN. It is 4-1.
Uncle, please stop.
Stop what?
You're giving someone else your personal identification number PIN?
Not someone else. It's from my bank.
Please hang up, Uncle. That's a fraudster.
That's not true. But they call out my full name. I am sure this is from my bank.
Uncle, no bank is ever going to call you to ask for your personal identification number PIN, your mobile banking password, or your card verification code, CVC.
But it sounded so genuine.
Yes, hackers and fraudsters always sound genuine. But please, Uncle, don't fall for their bait. Don't respond to any phony emails, text message, SMS, and don't click on any link you're not sure of.
Even if they call your date of birth or your BVN, don't give them your security details.
If you suspect any issue with your account, please go to your bank.
Oh, I see.
This message is from the Central Bank of Nigeria.
In the news this week, the Central Bank of Nigeria has notified authorized dealer banks of additional clarifications to the Pan-African Payments and Settlement System (PAPS). In a circular sent out Tuesday, July the 25th, referencing previous one on the subject matter, Director, CBN Trade and Exchange Department, Dr. Ozomena Nnaji, stated that Pan-African Payments and Settlement System (PAPS) transactions to be settled using the CBN foreign exchange remain trade-backed and that eligible payment mode shall be bills for collection. Customers are limited to $20,000 each per quarter, while authorized dealer banks (ADBs) are eligible to $200,000 each for the same period. The CBN will not allow multiple applications through different ADBs, and dealers are to obtain the approval of CBN for US dollar cover before initiating payment on PAPS. However, authorized dealer banks are allowed to maintain a US dollar account with the PAPS settlement bank to settle transactions for which the CBN would not provide foreign exchange. The CBN has directed commercial banks to leave the post-note debit PND that was placed on 440 individual and corporate accounts in the country. The directive was conveyed in a letter to all banks Tuesday, July the 25th, signed by Mr. A.M. Barao of the CBN Banking and Supervision Department on behalf of the director, instructing the banks to also notify the account holders of the development. The concerned bank accounts cut across betting, energy, technology, and fintech firms including Bamboo Systems Technology Limited, Escale Oil and Gas Limited, RiceVest Technologies Limited, Chaka Technologies Limited, Aboki FX Limited, NairaBet International, Northwood Energy Services, and Proport Marine Limited, and 432 others. A post-no debit PND alert is a directive that restricts a bank customer from withdrawing funds from an affected account. A podcast by the International Monetary Fund (IMF) on Nigeria's central bank digital currency CBDC e-Naira was published on its website last Thursday. The e-Naira was the first central bank digital currency in Africa and only the second in the world when it was launched in October 2021. In the podcast, IMF podcast producer Bruce Edwards spoke with an economist in the Institute's African Department, Jukyung Ri, on what a growing number of countries across the globe who are planning to have their own digital currencies can learn from Nigeria's experience. Mr. Ri, who was assigned to Nigeria when e-Naira was introduced and has since studied its impact on the economy, said the e-Naira needs to complement mobile money systems in order to onboard more citizens. Thank you for staying tuned. You're watching from the CBN, a weekly program that brings to you reports and expert analysis of the actions, policies, events, and economic initiatives of the Central Bank of Nigeria, CBN. 11 members of the CBN Monetary Policy Committee met on Monday and Tuesday this week at the bank's headquarters, Abuja, for its bi-monthly assessment of developments in both global and domestic economies and to decide on key monetary policy parameters while making projections for the rest of the year. The committee reviewed developments impeding the smooth recovery of the global economy, particularly the hostility between Russia and Ukraine, which could push commodity prices much higher than current levels, China's slow recovery that is dampening global trade, and the increasing polarization of the global economy, with several economies seeking alliances with a group of BRICS countries, increasing uncertainty in the direction of trade flows.
Inflation across several advanced economies has continued to moderate, but remains considerably above their respective long-run objectives, even as monetary policy tightening progresses. In emerging markets and developing economies, inflationary pressure remains broadly elevated, though there are signs of moderation in some countries. Global inflation is thus expected to remain elevated through 2023, despite broad measures by several central banks to ease the pressure. In the global financial markets, financial conditions remain tight and may exacerbate further as monetary policy normalization progresses. Investors' preferences is thus shifting to advanced economy fixed income securities with improved yields as well as safe havens assets. The International Monetary Fund (IMF) in its July 2023 World Economic Outlook revised the 2023 output growth forecast for the global economy upwards to 3.2% from 2.8% in its April forecast. The improved output performance was due to the sustained resilience of the global economy to the prevailing headwinds in the first half of 2023. Global growth is, however, projected to moderate downwards to 3% in 2024.
In the domestic economy, committee referred to available data from the National Bureau of Statistics showing that Nigeria's real gross domestic product (GDP) grew by 2.31% year-on-year in the first quarter of this year, compared with 3.52% in the preceding quarter. Committee said, though moderated, the positive and steady growth of the economy since Q4 2020 was driven largely by sustained growth in the services and industry sectors, supported by broad-based measures by both the monetary and fiscal authorities.
Staff projections show that output growth recovery in 2023 would remain positive as economic agents adjust to the recent policies on zero subsidy on the price of premium motor spirit (PMS) and convergence of exchange rates. On price development, the committee noted the quick uptick in inflationary pressures as headline inflation year-on-year rose by 38 basis points to 22.79% in June 2023 from 22.41% in the previous month. This was driven by the moderate increases to both food and core components. Legacy headwinds, including security challenges in major food-producing areas, high cost of transportation driven by the rising cost of energy, and inadequacies in public infrastructure continue to drive the rise in food and core inflation. Key developments that would likely sustain upward pressure on domestic prices in the short to medium term are the recent deregulation of petrol price and the transition to a unified and market-determined exchange rate. The unfolding dynamics in the monetary policy environment and the resultant pass-through to domestic prices will thus require greater collaboration between the bank and fiscal authorities.
The committee presented its outlook for both the global and domestic economies.
The overall outlook for the recovery of both the global and domestic economies moderated. Uncertainties remain, and global-level legacy headwinds such as the war in Ukraine and slow recovery of the Chinese economy, as well as ongoing BRICSification, are key downside risks to output growth. In the domestic economy, factors precipitating the uncertainties remained with insecurity within farming communities, high prices of PMS and other energy products, as well as pressure in the foreign exchange market persist. Forecasts for key macroeconomic indicators for the Nigerian economy indicate that the economy will continue to recover moderately through 2023 to grow by 2.66%. CBN estimate 4.2% federal government and 3.2% IMF.
In reaching its decision on key monetary policy parameters for the next 2 months, the committee considered the potential adverse effect of persistent rise in inflation on output growth and household income, urging the monetary and fiscal authorities to sustain collaboration in order to address inflation and incentivize domestic investment to reduce unemployment and boost output growth.
The committee remained cautious in arriving at a policy decision as members noted the need to continue to support investment, which will ultimately lead to the recovery of output growth. The balance of these arguments thus leaned in favor of a moderate rate hike to sustain efforts at anchoring inflation expectation, narrow the negative real interest rate gap, and improve investor confidence. The MPC thus resolved by majority to raise the monetary policy rate. 6 members voted to raise the monetary policy rate, 4 by 25 basis points, 2 by 50 basis points. 5 members voted to hold the monetary policy rate constant. All members voted to narrow the asymmetric corridor from plus 100 to minus 700 basis points at a new level of plus 100 and minus 300 basis points around the MPR. In summary, the MPR voted to raise the policy rate by 25 basis points from 18.5 to 18.75%, adjust the asymmetric corridor to plus 100 minus 300 basis points around the MPR, retain the CRR at 32.5%, and retain the liquidity ratio at 30%.
After the presentation of the CBN Monetary Policy Committee communique by the acting CBN Governor, Mr. Folashadun Shonubi, members of the press asked questions around interest rate, foreign exchange, Naira redesign, POS charges, and the central bank digital currency, e-Naira.
Thank you very much. My name is Sunday Michael Obu. Let me start by congratulating you on your
Sorry, which paper?
Daily Trust List.
Thank you very much.
Thank you. Mr. Acting Governor, it appears in the last 1 year, the only response on the table has been to raise interest rates in response to rising inflation. My question really is, what would you recommend, not just from the standpoint of the CBN, but to the government as a collective that every other party can do, to rein in on inflation and allow the poor to breathe? Thank you.
The first thing I'd like to highlight, it has made quite a lot of difference. And I believe in previous MPCs, we had indicated and shown that every time we have had a rate increase, it has actually moderated the rate of inflation. But that's not all that we've been doing. And during this MPC, we had quite a lot of time talking about inflation, talking about the various tools and mechanisms that we could use to manage inflation. We agreed that one of the key challenges now was the liquidity overhang, and we needed to look at the various tools we had. As a matter of fact, in the communique, you would have noticed that we made reference to that same fact. So in addition to interest rate hikes, we've also come up with various ways to tighten the liquidity, because we believe that if the liquidity surfeit actually runs across not just inflation, but also has some impact on the exchange rate and other parts of the economy. So I can confirm that it is not only rate change that we're looking at to moderate inflation. We're looking at every tool in the box that would help us reduce liquidity, and that should have a positive impact on reining in inflation.
Good evening, Acting Governor. I'm Nancy Naji. Morning, Nancy and AIC. Governor, you did speak about foreign exchange rate. I would like for you to give an explanation concerning the convergence since the announcement from the bank. I think just a few weeks ago, we've seen the seesaw between the official market and the parallel market. I would like to know if the Central Bank of Nigeria would intervene because exchange rate is now off the hooks, is a front burner topic and hot topic right now for businesses. And what role exactly the central bank will be playing? Is it that of the market maker role, or how would you intervene? That's my question.
The convergence, and use the word which is not exactly right, unification. We're not trying to unify any rates. We believe that we need to encourage the market to be more efficient and to be more effective, and that takes a bit of time. Some of the volatility you've seen over the period has been driven by that same fact that the market needs to find its level, and also the reality that there's pent-up demand which current supply may not be sufficient for. And as we ease and satisfy the pent-up demand, we begin to see a more efficient market that runs. But you also need to understand that the dynamics of pricing in the market, and we feel we should actually stop calling it the I&E, because it is now much more than the I&E. For us, it's a market where everybody and anybody, through the licensed institutions, can participate. So we expect that over time, sooner rather than later, the volatility you are seeing would normalize. The role of the central bank is to intervene and keep the market at a fairly stable level. We have our views as to what that level is, and as the market continues to oscillate around that level, if there's a need for us to intervene, either by buying or selling, that's the role of the central bank. We will continue. We have started intervening, and we've been doing it for a while, and we will continue to intervene to bring the market to the levels that we believe it should be. Right now, in the short run, these volatile times are expected, but we expect them to moderate sooner rather than later.
Sir, my name is Nduka Chejin of the Nation newspaper. Mr. Governor, December is fast approaching. Please, can you give us an update on the status of the Naira redesign project? And then why is it that we are not seeing enough new Naira notes in circulation? Thank you very much.
When a currency is printed and sent out, it is expected that it will go through a number of cycles, and then over time will become one and then would be replaced. That's what we're doing. We had to put out or re-put out old notes, and as they're coming in, they're being processed and returned to us as not issuable. We're then bringing out and replacing them with the new notes. We believe that we have an optimal level of the currency out there, so more of what's being done is replacement to keep the level, rather than just putting out money out there. And that is seen by the fact that the banks, whenever they come to us for notes, we provide it to them. If it wasn't enough, they would be asking us for much more. If it was too much, they'll be dumping that much more.
Babajide Komolafe of Vanguard newspaper. Sir, the Association of Mobile Money and Bank Agents in Nigeria recently announced increases in point-of-sales transaction charges, citing the current economic climate in the country for their action. What is the CBN doing to check issues of unauthorized charges levied against customers?
The model that the central bank runs is that we do not deal directly with the POS operators. We have companies that we license, super agents, and the super agents then have agents, amongst which are the POS operators that have the point-of-sale devices. We have regulated prices with the super agents, and it's their responsibility to enforce those prices amongst the agents that are working for them. So we have informed and reminded the super agents as to what those charges are. And whenever or wherever we find agents that are responsible for behavior, and not just on charges, but behavior in general, that is not in line with the rules of operation, we actually sanction the super agents because they are the primary entities that we have licensed. So whenever we have such situations, please let us know.
Bukola Ido of the Leadership newspaper. Acting Governor, sir, with other central banks mulling the idea of floating their own digital currency, what is the status of Nigerian Central Bank's digital currency, CBDC, the e-Naira?
We continue to learn and we continue to tweak and we continue to change the model. We have over 20 or around 25 million people who are registered and have wallets, but we haven't seen the level of activity that's commensurate with those number of people. So we continue to talk to them. The volumes increase and we learn with each passing day. We are reviewing the model and we think soon, definitely before the end of the year, you'll see significant growth and changes because the feedback we've gotten from the public and the marketplace has been distilled, and we're listening to them, and we believe it's going to have an impact on the adoption, and then maybe we'd have less new Naira notes to print. Thank you very much.
The International Monetary Fund (IMF) released its World Economic Outlook update earlier in the week, calling for multilateral cooperation for a safe and prosperous world economy.
Growth in emerging markets and developing economies will remain stable at 4% this year and 4.1% next year. Now, this masks significant differences between countries and regions, with emerging and developing Asia growing strongly at 5.3% this year, while many commodity producers will suffer from a decline in export revenues. Elevated debt levels are preventing many low-income and frontier economies from making the investments they need to grow faster, with high risks of debt distress in many places. Now, some of the slowdown in growth reflects the spillover of harmful policies. The rise of geo-economic fragmentation, with the global economy potentially splitting into rival blocs, will most harm emerging and developing economies that are more reliant on integrated global economy, direct investment, and technology transfers. Insufficient progress on the climate transition will also leave poorer countries more exposed to increasingly severe climate shocks and rising temperatures, even as they account for a small fraction of global emissions. On all of these issues, multilateral cooperation remains the best way to ensure a safe and prosperous economy for all.
Nigeria is a rich nation of green land, rich resources, countless crops and commodities sufficient to feed and provide a means of livelihood for her teeming population. Chin up, Nigeria, the giant of Africa. Exciting times are here. We can be self-reliant and grow our economy if we work together to explore our potential. It takes a whole nation. Let us get involved. Buy Nigerian to grow Nigeria.
That's all from the CBN this week. Be careful not to fall for any fraudulent recruitment portal or loan scheme advertisements purportedly from the CBN. Get your information from trusted sources always. Report unresolved banking issues to the CBN Consumer Protection Department using the email cpd@cbn.gov.ng. Attach relevant documents. Call the CBN Contact Center on the phone line +234 700 2255 226. Local call rates may apply. Write to us through the email address fromthecbn@gmail.com. Follow us on Facebook, YouTube, Instagram, and Twitter for updates and to watch up-to-date episodes of the program. We invite you to join us again next time. I'm Oluyemisi Dada. Stay safe and bye for now.